Alright guys, it's been a minute since I've uploaded a tutorial on CoinAnk, but I think it is time. Took a while to really make this video. But one thing I wanted to do is just give an update and then talk a little bit more about things on CoinAnk to learn that I use. So one thing I did say before is when you're drawing trend lines on, let's just say, taker buy sell volume delta, just got to be careful because it's more of like a macro thing instead of a short term thing. So for example, like I was testing it out because like I wanted to verify this because I already did this before. I verified this, but I just want to kind of just do it again because I did see a couple instances on the shorter time frames. This was kind of working out a little bit, so I was just verifying it. And just I did this on Ethereum. I did this on Bitcoin. In general, yeah, it's more of a macro thing where I would use it on like I would more use it on the 1 day, 4 hour minimum, 1 hour minimum. Even then, that might even be too short term of a time frame. Just because it's like you're gonna get so many things on shorter time frames. You're just gonna get so many, you know, traders drawing trend lines and stuff. I mean, look at this. You could say this is a trend line like that. That didn't go anywhere. So my point is, macro is more for the trend lines on when you're drawing trend lines for something like a take or buy, sell delta, or aggregated liquidations, open interest, all this stuff. Honestly, this is like I if I was to draw a trend line anywhere, it's not likely going to be on the charts. It's likely going to be somewhere on like momentum waves on market cipher or liquidations somewhere on like take or buy sell volume delta. I'm not trying to look at a clear retail trader indicator. Like what mostly retail looks at, I'm really not trying to look at that often, just because I know that's not what really moves the market. That's, if anything, you try to pay attention to the manipulation that's making traders in the retail side get into the charts. So that would be like 100K on Bitcoin. 100K. You know, a lot of people are going to be coming into shorts. I already explained this in my Discord. Many, many, many logs. Okay, 100K. We already know there's going to be a run to 100K. So that means a bunch of people are going to come in shorting at 100K. So what happens when you actually hit the 100K? You end up blasting through the 100K and liquidating any shorts that came in at 100K because people are like, oh, it's 100K. Psychologically, I got a short. I got a short. So with that being said, yeah, you might be right. Because like that's takes a big man to say that I'm selling as everything is pumping. But at the same damn time, you gotta understand the psychology of 100K. Bunch of people, even people who think they know what they're doing, they're gonna come in. Traders, think they know what they're doing. They're gonna come in. They're gonna try to short this at 100K. So where is most of their liquidations? I would say it's likely above 105 because they're likely going to be like, okay, I'll put my short at 100K. If it gets above 105K, I'm going to have to be forced to take out. Generally, that's when they get manipulated. So what happens? 105K is right here. All this is logged, by the way. Everything. 105K. And then look how little amount that it came above 105K. Only 3K. And in reality, it's very small in price action. Very, very, very small. And then it just reversed. Came down really quickly. All of this, we called all of this. So, one thing I gotta say here is I haven't been looking at the liquidations. I haven't been looking at the taker buy sell delta. I haven't been looking at net short, net long, volume. I haven't looked at any of this to call all of this. And kind of the point I'm trying to make here is that I use these when I feel there's an opportunity or an imbalance to exploit. I'm not just every single day looking at this and saying, okay, I'm gonna make a play off this. I'm just kind of like getting an idea, and I sometimes I don't even look at it. Like I just said, I didn't even look at this. I haven't looked at this specifically in a while. What I have been looking at is the order books, bookmap. We can go over to bookmap live here. Let me just give me one sec. Oh, sorry, one sec. I was making sure I was recording the whole time. All right. So what I'm basically doing while the screen is black is pulling up this YouTube live channel. Basically, it's gonna give you the book map for free. Just give me one second. All right. All right. So here, book map live. You're gonna go over to the live tab right here, and you're going to search for this one right here. That's ETH. Hold on. Huh. It's probably this one. Yeah, it is.
Healthier starts here.
It's gonna have a different look to it sometimes because right now it's the weekend, so there's not like much going on the lives. He has like 30 lives during the weekdays, but it's like on the third down or something. Like it's like somewhere around here on the third down usually. But right now it's up here because it's the weekend. It's like the only thing up basically. So I come over here and I'm just like basically I'm looking to get a general idea of the orders on the book. How are they coming in? Are they disappearing? Like see these orders right here? They disappeared. Okay. So I know like over here, if we come over here, we have orders, but we don't know if this order has been taken out before, right? Like it could have just came right back in. We don't know if it's like honestly like it's kind of hard to read orders on CoinAnk, but it gives you a good idea of putting it on the chart with the rest of like your technical analysis. But if you come over to Bookmap Live, you can see just the real idea of how orders have been coming in and out and if they have conviction. See, this is something with conviction. This building, it could just be because it's at price. Because there's a lot of things moving up and down and coming in and out. This is not there anymore. So you could have been here, right here at this price point, and you could have been looking on CoinAnk, and you would have thought, okay, let's come to this order. The order disappears, right? And you don't see it anymore here. But if you come over here, you could see that it disappeared. So it's kind of hard to get an idea of what has disappeared on CoinAnk, but you can see on Bookmap. So right now I'm kind of like seeing a bunch of orders. 139. It's pretty light because it's a Sunday. Sydney hasn't opened yet. Pretty light. I already said this in the Discord that I'm kind of expecting this to possibly come up because this is moving down so early in the morning on a Sunday, which they usually don't do. They kind of like trying to set it up slowly for Sydney to open because that's the first session on Sunday to open. And so generally if we're getting this big move down, I would expect, because we didn't even get a move above the psychological high, we can come right back in. Also, psychological high and low is so close together, unlike, previous, is this not loading or something? Or whatever. So unlike previous psychological high and low, this one is very tight, meaning it could very easily come back. It can go lower below it and then come right back above it. And usually what you want to do is you want to see the run away and or run above the psychological ranges for the week to get an idea of how it's gonna react the rest of the week. So for example, if we get a run below, a run up, and then start moving away for the week on Monday, and then we generally maybe we retrace and we hold this as resistance, the psychological low, and we start moving back down, then you could say that you're generally running away from Asian session Monday's Asian session Monday's Asian session. So that would be around here because it's coming into Monday. So generally you want to see like you see these boxes right here, these green boxes and stuff. See how it says Tokyo right here and Hong Kong. You want to see Tokyo and Hong Kong and mark that off and see their highs and lows and just see how it reacts the next day. Sunday, not that important. Like today, Asian session. Sundays, it's not that important. Monday night Asian session is the most important because if you start, let's just say, running away from Monday's Asian session and you already retraced into it and you've gotten conviction and you're now about showing conviction to run away and you're running away, you could then say you can look to move higher or lower depending on where you're running away from that Asian session. If you're running away in the direction above and it's below you, or like below and it's above you, depending on it. So let me give you a quick example. Okay, Monday. Okay, this is where Tokyo opened, and it looks like that's the low. And this is the high. This is the end of Hong Kong, and that would be the high. I'm going to mark that as 42 opacity. Put it to the darkest color. Okay. And so, as you can see, we tried to run above it and got canceled. And then we started moving away from it. We did try to come back into it, and that's the key point right here. This is the key point. You try to come back into that Asian session for the week, and you get rejected, start moving away. This is the sign right here. That red vector, you're running away from the Asian session, Monday's Asian session of the week. Only thing you can say here is that you can short and be prepared for a possible run up here and then come right back down. But this is the 105K and it's a pretty big psychological range. You would assume that it's likely not going to close if it does get up there. So I would like to hold sessions. I would probably say Asian. So this is Sydney, this green box. This is Tokyo. So the Asian session high would be here, right here. So if you were shorting right here, you'd put your stop loss right here. If it came back up and started showing weakness, started coming back down, you lower your stop loss and you add to your position. You only add to your position if you can lower your stop loss. That's kind of like my rule. It helps you not like add to a bunch of positions in the same range and then it moves down and you just get liquidated. Keeps you in the position, keeps your risk managed. So then it starts moving down. Okay, you could pay yourself, in my opinion, you would take profit, especially when you start to get these big vector candles closing like this, because you know it's very likely not going to go farther because you got the euphoric move. So it's likely not going to go farther. So are you really think about it in this way, right? Why don't you just close this? Because then you would be waiting 1, 2, 3, 4, 5, 6 to 7 hours for this little movement right here. Or you could just close this in 1 hour and then come back another time. It's really about day trading. You're trying to make the most amount of money in the shortest amount of time, so you have to keep in mind the second coordinate to your trade is not, first coordinate is price, second coordinate is time. So if you're wrong on the time, you're wrong on the price. Doesn't matter if you think it's going to go down here. You're day trading. You got to be in and out. Okay, if you're swinging, you're exposing yourself to more risks. That's why I don't like to swing as much. This could have been a really nice swing for a lot of people. I took very mini swings here and there. Didn't want to really trade FOMC and BOJ, so I kind of like stayed to the side a bit on that. But yeah, that's basically so far when how I'm coming to the charts and how I'm kind of looking at the charts and getting an idea of what's gonna happen so far. Um, one another thing is I gotta black this screen real quick to show you this. 1 second. Okay. So come over to finviz.com, finviz.com. You can go over the futures, and this gives you an idea of what's going on for the day. Okay, try to pay attention to VIX. If VIX is up and NASDAQ is up, you can assume that they're heavily selling. What happened when NASDAQ was up here? It was VIX. VIX was slowly coming up. It was green. And it kind of gave me the idea that they might be selling heavily, especially because there was a gap right here. Okay? So you could have took a short right here. Now, come over to futures. Again, you got to remember everything moves with each other. So if Nasdaq's going to be moving up, put um that's going to put dollar in a compromise, right? So it might not be moving up so heavily, but is it strong? Is it staying high? Okay, that might mean gold and Bitcoin's going to do good. Okay, we got a strong dollar. People are going into risk. Okay, we got war going on. We got drones going over my freaking house in New Jersey. Okay, gold. They are loading up. What does sideways price action during war tell you? During an escalation of war tell you? Probably they are loading up. Now, at the same time, they might actually be selling, as in they keep it up here throughout the entirety of the war, and they might only come up a little bit more and just kind of keep it in this range because they've hedged themselves already and they've loaded up. You think that they're buying right now to hedge themselves? No, they are very likely slowly selling as the war in- increases in intensity. The amount of gold and Bitcoin that they've already purchased a long way back. Okay, this has been warming up for a while. Okay, so basically, what's euro doing? Okay, when euro goes up, that means foreign markets are gonna be doing good, right? So that means like you know, generally it's an environment for Nasdaq to move up as well. If JPY is moving up and euro's not really doing good, things like that, just like JPY, it could tell you that Nasdaq's not going to be doing good because they're not looking for borrowing JPY to taking out loans for JPY to then go buy a high yielding dollar to then purchase, or sorry, wait, a lower yielding dollar that's expected to be high yielding to then purchase with that dollar stocks. Meaning, if JPY is up and Euro's down and Nasdaq's kind of not really doing so good, you can assume that what they're doing is they're instead of going and taking JPY, converting it to dollars, and then taking those dollars into the stock market, they're doing the opposite. They're borrowing dollars. As you can see, the dollar is kind of down, so they might be doing this. They might be slowly setting up for this switch into JPY. So they're borrowing dollars, buying JPY with those dollars because dollar is very high yielding, meaning it's moved a lot up, and they can now borrow a lot of dollars and then trade that loan for a lower yielding, expected to be higher yielding yen. Okay, so all of these things is what I'm looking at when I'm coming to the charts and seeing, okay, where could money be moving today? And maybe it's a day for forex, maybe it's a day for stocks, maybe it's a day for crypto. I specialize in crypto, so I always try to focus on crypto. But you gotta understand it's not your day, right? You gotta understand sometimes it's just not your day. And you gotta move to what is pumping or what is in the focus of things. So focus on VIX. Right now we just had a run. We had a big quick run to 20. The general consensus is if it is going to 20 and it is above 20 or above, you buy because it generally doesn't last long when it has those opportunities. And you buy in stocks risk on those types of things, because what VIX is, it's kind of like an indicator for overall markets, right? If it's going up, that means markets are dumping. So if it's above 20, that means markets have dumped big time. Usually doesn't stay like that, right? So if it's above 20, you can then buy because it is a massive amount of people selling. You can then buy. It tends to come right back down. Look, 20 all the way to 18, and things are kind of, how do you say it? Things are kind of cooling off a bit, right? So come over to Nasdaq. How's Nasdaq doing? Oh, would you look at that? It's cooled off big time. If you bought, you would have made a bunch of money, off the VIX. So again, don't buy VIX. That's not what I'm talking about. I'm talking about using VIX to get an idea of when to buy risk on, like Nasdaq, stocks, overall crypto, things like that. If it's pumping big time and it's above 20, you can start buying. If it's in these ranges, bro, yeah, you're gonna throw a bunch of money down. Like, it is what it is. Throw a bunch of money down. It is what it is, okay? Because it's gonna come right back down, and then when it comes back down, even if you're in a bear market, you're gonna then offload your position because you're not here to hold that forever. You're here to exploit an opportunity that the VIX is showing you. In, out, in, out, not in and hold it until it comes right back up, and then you're liquidated. Okay, in, out. Okay. All right, Nasdaq, S&P, Dow Jones, Industrial Average. I heard Dow Jones is having an insanely long down streak. Interesting. Okay. Gold again, gold. If gold's doing good, the environment should be good for Bitcoin in general. If oil's doing really good, that's kind of giving you a sign they might not be really looking for risk. But because the dollar's kind of down, Nasdaq's up, Euro's up, we have a little bit of an iffy situation with JPY and crude being slightly up, but not that much really. Um, it should be a good day, but this could be going off of Friday. I'm not sure. I usually don't look at it on the weekend. I'm just trying to give you an idea of if it showed this on a weekday, this is how it'd come to the charts. Again, this is Sunday, 11 a.m. on a Sunday, so this might just be showing what Fridays was because markets are closed for the weekend. This is just me showing you how I would look at it, right? As everything is connected. Okay. Now let's come back over to CoinAnk. Little, I forgot exactly what I was trying to go over. There's one thing I didn't go over. I think it was the book map. I mean, the order book. All right. So, well, I don't use the order book too much, but I do keep it up on the screen just to get an idea sometimes. So, like 95K has a bunch of orders, has the most orders really. Where is that? 95K. A bunch of people are coming in very close to price. This might be here. 10 mil, 10 mil. No, it's just 10 mil, and then there's a 2 mil, 3 mil. Then there's 2.2. It's a little bit of money right here. What have they been picking up? If they've been picking up massive amounts, that means they should be good to turn around because they have Bitcoin now to sell. It's a decent amount, not that much so. Oh yeah. See this right here, this area. This is where most of the orders were coming in. Where's the biggest order? And I'll mark that. That's usually what I do. So look, 95,633. All right. So find where most orders have been transacted and mark that and see how it reacts to that area. this is important because this is how you get like the value, the value area, and in general you can then from that kind of like get an idea of maybe where the value area high and low might be as well. Just a general idea. Like I do a lot of guessing when it comes to value area high and low because I'm usually just trying to go off of the value area. I don't mind too much about knowing that information, even though it can help you. I just want to know generally, okay, are we in, as Tino from Traders Reality says, are we in the champagne or the orange juice? Right? It's kind of like you can get an idea. You don't need to know the exact thing because I have the value area right here. So just an idea. Value area high, probably up around here because this is where we recently were. So it would probably be up around here. Value area low, probably starting to be around here in this area. I could be wrong on that, but this is just how I taught myself and how I've learned. You know, everything in trading, it's really how you react to it. So, you know, I don't like I said, I don't use Jigsaw, so I don't know the exact value area highs and lows. So I don't want to sound like I don't know what I'm talking about. I'm just letting you know clearly. I don't use Jigsaw, so I wouldn't know that. But I do get an idea because it's very important to know overvalued, the perception of value, undervalued, which would mean value area high, low, perception of value, at value. See all these orders at value. This is very important. It's like an auction house. You're gauging at what's value looking like right now. Is this a good deal? Is this not a good deal? How's conviction coming in? There's a bunch of orders coming in right now because people think exactly what I'm thinking. It's starting to look like a good deal, and then you piggyback off of them a little bit, in a sense. Alright, so I mean, yeah, we already went over all that. Again, you see a big order. You look for the biggest order. Let's just say we're in this range right here, and we hit a 35 mil up here. I'm gonna take off large orders, and I'm going to mark off that 35 mil by putting a trend line completely across. And I really want it in the closer range to see how it reacts. I'm not really caring too much or paying attention too much on like 3, 4, 5 days later on how it comes back and reacts to that area. Because really, it's just like today. What's going on today? That's why I'm marking off down here. I'm not I'm not coming over here looking at the big orders over here. I'm over here marking off the biggest orders basically for the day, just down here. Ironically, it's at the bottom at 10 in the morning on a Sunday. So I'm kind of expecting this to move up, but just the way it's kind of finding value down here, it's iffy. I say it's iffy. I think they might not be done manipulating, as in comes down a little bit and then shifts right back up, and then eventually starts rolling over. But go play by play. You can get an idea of what's gonna happen in the future, but try to go play by play because think about it like this: Are you the probabilities go down of you hitting that here? Let's just mark it off. The probabilities go down of you hitting that win if you're, let's just say you're entering, and let's just say you're trying to take a long to come up here, and then you're trying to take a short to come down here, or you're trying to short right here thinking it's going to come down here, and you're like, I'm okay if it comes up here first. This is like all greed, and it's not managed risk. So what you need to do is you got to remember the probability is lower. So if you're trying to think 2 steps ahead, you're now adding, it's like a parlay, right? You to win, you now need to win these 2 scenarios, and you're putting yourself in this weird situation, right? Or you cannot make it a parlay and say I'm just going to win per scenario. and just be like, look, I'm just looking for this move up. That's all I'm doing. Boom, I hit the move. Cool, I closed it. Now I'm looking for the next move. I see it's getting rejected. And I see it's starting to move down. Maybe it comes up, gets rejected. Boom, starts to have red vectors come in. Okay, well we come into a short stop loss up here in case it just wicks up here and comes right back down, and then take profit down here. We're going play by play, and then boom, we win. So the whole point is you're not parlaying it. You're not like, okay, I'm gonna wait two. I'm gonna predict two moves in advance, and that's gonna be my take profit. Don't do that. Okay? Please don't do that. Okay. One issue with this goddamn program is I draw and I can't like press the undo button. It's pretty annoying. Oh, that's been there the whole time and I didn't know that. Okay, yeah, I'm dumb. All right. Well, that should be it for this video. I just try to make it as quick as possible because I have a lot to do. Hopefully this was good video. Give me some feedback. Leave a like if you want some more. I was going to do a video every weekend, but I've been way too busy, honestly. So hopefully some more in the future. Hope you guys enjoyed. Peace out.